Greetings everyone, welcome to another episode of The Professionals You Should Know. This show is about uncovering the journeys of professionals from different industries. And today we have the vibrant and resilient Christine Waweru, who is a qualified actuary. Thank you for joining us, it's a pleasure. So, what is it that you do?
I am an actuary by background, profession. Currently, I am in a role where I'm acting as a product advisor, specifically responsible for cyber catastrophe risk. Whoa. So basically, let me talk a bit about that side, and then I'll go back to what actuaries do to get there. But currently what that means is that I get to have conversations with clients about our products, which basically, just delivering analytics, high quality analytics to the within the cyber industry, the cyber market, and specifically for insurers right now. So my role is to explain what the product is, how the methodology behind the product, to just help them to come up with a view of their, cyber losses and all that.
What do you mean by cyber losses? Is that like data or like financial losses? How does that
work? So when I say cyber losses, I just mean
cyber in general.
Yes. So I just mean based on the information that they give us about who they're insuring.
Right.
We take that information and then we estimate if this event was to happen, this big cyber event was to happen, then how would the losses look like? So we're not saying that it's 100% going to be that way, but we're saying, hey, this is what we estimate, the view of losses would look like if this event was to happen. And that helps the insurers and the reinsurers to make informed decisions. For instance, they'll be like, okay, let's put this money aside to help us prepare in case of that event, or any other, many other decisions that, they can make following such insights. So, and then in return, of course, I listen to the client if they have any pointers on what to improve, or if they want to also contribute to developing the methodologies more, I communicate that back to my team. So that's the role of being a product advisor. And those are some of the responsibilities I have currently.
So what is the actuary then? So,
yes.
Yeah.
Yes. So the actuarial profession is a very interesting one. It's very varied. But if I was to be asked to summarize, in my opinion, and I think if you were to ask many actuaries, they'll give you very different answers.
Right.
But I think as actuaries, we do use data and perform analytics on this data to help us have a view of how a risk looks like. And when I say risk, I mean that actuaries, we take information from the past, from the present, and even what we think the future could look like, to bring all these things together and in analyzing data, so that we can be able to give insight, into, hey, this is what we estimate can happen, and so this is how we should prepare.
How far do you look back into the past? Is it like?
Of course, we don't want to look way back into the past, because sometimes the information can be irrelevant because things are changing. So for instance, typically, depending on what you're looking at, maybe 10 years worth of looking back makes sense. But if you're saying 50 years, the environment was very different for you to say that information is still credible. Although, again, I say it depends on what you're doing. But yeah.
So what was your journey like? Why actuary?
Why actuary? My journey is actually I think it's an interesting one.
Okay.
In the sense that I was in primary school, what do you call it here? I think grade 8. So let me background. Born and raised in Kenya.
Okay.
So primary school was like up to, we'd call it standard 8, which is like 12, 13 years.
That's primary school?
Yes,
Oh,
that's primary school.
That's our secondary school.
Ah, I see. So,
We start secondary
and then
school.
after that, you start high school.
Okay.
So, yeah, 13, 14, you start high school. So I was just finishing primary school, and I had a friend who was already 1 year into high school.
Okay.
And I think we're just having a conversation. I was like, what would you want to be when you grow up?
Yeah.
And then they were like, I want to be an actuarial scientist. I was like,
What is that?
sorry, I just know doctor, engineer, lawyer, you know. So I got very curious. At the point, I wanted to be a cardiologist.
Oh, wow. Okay.
Yes. Just because I read Ben Carson's book and I was like, what's the next hardest thing other than the brain? Let me do the heart. You know, that was purely the basis for me wanting to be a cardiologist at the time. But I was still curious when I heard this. I was like, okay. So I went to a cyber cafe because didn't have a laptop in the house, and you know, I grew up in a humble, like I'm from a humble background. So went to a cyber cafe, researched, and I was like, oh, this looks...
Cyber is computer cafe.
Yes, computer. Okay. Oh, yes, computer cafe. Yes, we call it cyber cafe. Oh, yeah, yes. Yes, so research, and I was like, oh, this looks cool, because the basic research, what was coming up is that actuarial science combines mathematics, economics, finance, law, accounting, and all these things. Brings it together to have deeper insight into problems. And I just found that variety to be very interesting, but I just kept it at the back of my mind. I was like, okay. Then I entered high school. In my third year of high school, I was part of a club called Junior Achievers. Okay. And basically that was a club that would expose us to like various careers, meet different people. So on one occasion, I had gone for a job shadowing opportunity at a hospital. I was taken to the physiotherapy department. Okay. Let me tell you, that was the day I knew medicine is not for me. Literally, I would just see people maybe who had accidents or something, just being stretched, and just the pain I could see that they're going through. I just sat and I asked myself, Christine, if you cannot bear to see someone in this pain, how can you perform surgery on a heart? So that now concluded my dream of being a cardiologist. And then I started thinking, okay, so what am I interested in? Like when I look at the subjects that I'm doing in school, and I was like, math is my favorite subject. Okay. And then now I went back to, okay, and then at the time as well, I was like, I'm going to Harvard. Or Yale. So I researched, I was like, actuarial science. I'm like, Harvard does not have actuarial science. I don't get it. Okay. But I would see courses like economics and finance. So I was like, okay, let's settle for economics and finance, just because in my mind I was going to Harvard or Yale. Okay. Yeah. Okay. I think University of Pennsylvania, Wharton University had actuarial science. So I was like, I'd apply. Yeah. That didn't work. But still, I think at that point in my third year, when I started thinking of economics, finance, and the possibility of actuarial, depending on the school that I managed to get into, that's when I started entertaining the idea. Right. And then finally, all these schools, they didn't work out, but I got to study in Kenya, and that's when I settled for actuarial science. So I was like, okay, let me do actuarial science. So that's the journey, primary, high school, and then getting into doing it.
And how do you find it so far? Do you enjoy it?
I do. I feel like the variety offered by actuarial science is so wide, because if you feel like one area is not for you, you can always try a different area. So for instance, there are actuaries in like the insurance industry. Yeah. But then there are the actuaries in banking. Okay. So if an actuary is like, oh, the insurance industry is not for me, they could try a banking. And then there are also actuaries in non-traditional spaces like retail, infrastructure. And I'm sure, they're doing fantastic things as well. So yeah.
So when you're saying like actuaries in different industries, or their main job, is it to just make sure that they assess risk for the company that they're attached to?
That's a very yes, that's like a summary.
Right. Okay.
And like risk, actuaries are involved where there's risk. That's I think for me it's a good summary.
Right.
But when you come to the particulars of
Yeah.
what we do, it could look different. So for instance, there are actuaries who are in the area of pricing. So what that means is, for instance, when you look at your home insurance, someone came up with a price for that.
Yeah, that's what I was.
Yeah.
How do you-
And like for instance, in this case, you know, just based on the data, you want to be fair in how you're pricing. Like you don't want someone who's a high risk to be charged the same way as someone who represents a lower risk. So actuaries will use data to try come up with those pricing factors that are fair and that represent the risk that someone poses.
Is that data by age or data by like
could be
profession or
yes. So
it's
like in
amalgamation
life
of things.
insurance,
right?
Sorry to have jumped in.
No, go ahead.
Yeah. So in life insurance, age is a factor because, the older you are, the higher the chances of, dying compared to someone who's, or even sometimes your health status.
Okay.
Given some health conditions, maybe chances like how long you're expected to live might be a bit shorter than someone who's like looked at to be physically fit without counting like accidents or things like that. So yes, such factors, for instance, in life insurance and in non-life. When I say non-life, I mean anything not to do with life. Things like for a car, the type of car that you drive.
Okay.
A Mercedes or a Rolls Royce,
right,
the insurance will be much higher than that of, a typical, as you said, because Rolls Royce, if it was to get into an accident, you can imagine how much you'd need to, pay to take care of the damages compared to a cheaper,
so
vehicle.
You guys would like calculate how much that would roughly cost for
estimate. We always call it estimates because we are all very aware that we're never 100% with these things. We're just estimating that this might happen, best estimate, like this is the best we could estimate, although we're acknowledging that it could be higher, it could be lower.
Sounds very difficult. Very, that sounds very in depth. The amount of, because I know you're making it simple, but I know the amount of maths behind it or the amount of analysis would have to go on through. Yeah.
And to be honest, the journey to becoming an actuary.
Yeah. So what is it? So then after university, is it like what, 5 years or 2 years, or how does it work?
Right. So this is another interesting concept.
Where?
There are very many people who did not do actuarial science in uni and they're actuaries. So why, you ask? Someone who actually did physics
can be
an actuary.
Okay.
Or someone who did English can be an actuary. And I have seen many examples of that here, at least in this market. So basically, the actuarial profession is mainly, for you to get that title, it's a title.
Right.
A designated title. The same way you say, this is doctor,
right,
so and so. Actuaries also have titles.
Right.
For instance, we're normally called like fellows once you qualify.
Right.
A fellow, depending on the body that you start your exams with, maybe fellow of the Institute of Actuaries, that's in the UK. So, and that comes after you've passed a given set of exams.
Right.
So that's why I'm saying someone could have done English in school, but if they're like, you know what, I want to pursue these exams, and do these exams. Maybe they're like, English is not my thing, let me just be doing this on the side. And maybe, you know, they're very intellectually and gifted to also understand things from the actual, like from what they're reading, so they can actually start the papers. And once you finish, and you know, you also have to record, of course, experience, relevant experience by the time you're getting the designated title.
Fair enough.
So yeah, that's what I'm saying. There are people who've done English, but then they're now working in insurance companies, and they've pursued the actual path because they did the exams and they passed the exams.
Well, I thought it was like maths heavy maths based.
Yes, it is.
Oh,
the exams are.
Okay.
But I think the point I'm trying to make is, if you pass the exams, that's all that matters. And then now, of course, showing that you have relevant experience in that industry.
Right.
So that's why whatever you did in school, in uni, does not matter. Although if you did actuarial science in uni as a course, it gives you it like creates a better or a quicker, easier path for you, because you learned some of these concepts. So by the time you're coming to do the exams, you're kind of understanding.
So how long does the exam process take? Like, what's the?
I took 8 years.
8 years. Wow.
Some people who are like extremely super dedicated and super smart can take 3-4 years.
It's still a long time.
Yes, and I think for me it's because I got stuck on one particular exam, like the last exam, for 3 years.
Wow.
So basically it's because there are 2 sessions when you sit an exam in a year.
Right.
At least with the body that I sat my exams with, the one in the UK.
Right.
So if you miss it in April, or if you fail it in April, wait for September.
Yeah.
So I think for me, if you know the 3 years, it wasn't like I was doing it all the time. It's like April, next year, you know. So that's how I was like, let me tell you, this actuarial exams for me, and I think if you speak to many actuaries, honestly, it's more of a test of character.
Oh, okay.
Than, I mean, people get into these actuarial papers.
Yeah.
We're all intelligent. In school, we scored our A's, first class.
Yeah.
You start doing the exams, you're like, why am I failing?
Really? Is it that difficult?
This was my first, I failed an exam. Like, what do you mean? And a lot of people go through those shocks. Okay. And I think if you're not resilient enough, many people drop out. Because they're like, I can't do this. First of all, I did 15 exams. Now it's
15.
Yes. And now they've been reduced to, I think they've tried to combine some things to reduce.
Right.
But still the content is the same.
Right.
But you can imagine, so I started off while I was in my second year of uni. And 8 years later. Because by the time I was finishing my undergrad, I had 9 papers.
Jeez.
And then once you start working, reading is really hard. So count those years again. So yeah, I think that's what I mean by, if someone has already started the first 2, 3 and they're still failing, you just look ahead and you're like, you know, so many people tend to drop out. For me, the case was a bit different because I passed all of them first time, except for my last 2 papers. And to be honest, for me, it was because I was nearly giving up on the last one.
Really?
I was like, it's fine. We can have 14 papers and it's fine. We can say we were nearly there. But I remember my father saying, you know, even if you're just one left, no one cares. At the end of the day, it's either you finish or you know. So it took a lot for me to, because there are feelings of failure, there are feelings of, will I ever get there? You doubt yourself. So you really have to push through.
So what kept you going? Is that your father's words or just...
No, I think it was more of God has brought me so far.
Yeah, can't stop now. You might as well.
It's just, yeah, the final one, you know. And my father as well used to tell me, even if you do it for 6 years, just keep going.
Yeah,
It's just one.
Yeah, yeah.
Although it's harder said
than
done. But yeah.
Wow, that's
Yeah.
amazing. So what are like the misconceptions from like actuary or actuary as a, because I know you went through one that, you know, you don't have to actually be an actual scientist.
Yeah.
But yeah, what are one of the other misconceptions or other misconceptions that actuary have?
I think misconceptions that people on the outside have
Okay.
is that we make a lot of money really easily.
right.
Yeah. Because that's one of the many reasons
I didn't see that.
people have done, like, many people get into uni wanting to do actuarial science because they're like, yeah, the money's going to come after I graduate. I'm like, yeah, the money is coming, but the money will come if you're in the profession, once you do the exams, qualify,
right,
gain the relevant experience,
right,
and like there's an extra layer. It's not just I've done my degree in actuarial, because the thing is,
right,
and especially in Kenya, let me talk about Kenya because that's where I started off. The competition was so stiff in the market because the industry can only assimilate a limited number of actuaries.
okay.
So you'd find that after school you have two people who both scored first class honors.
Yeah.
One does not have the actual exams.
Right.
Another has like 5.
Right.
Typically the one with the actual exams would get the job.
Yeah.
And not because they're smarter not because they're smart or anything, just those papers differentiate you. And also, if you're on the path to becoming an actuary, that's what defines the exams. So, yeah, it's not just, the money just doesn't come, straight away. You have to work. You have to, and then by the time you realize after you're done with your papers and you've gotten relevant experience, you're already like 7-8 years into your career. But then the rewards can be nice.
Oh yeah, I can imagine.
They can be nice. I know. Let me say this and put a caveat because people are different. To one person, £1 million is
it's relative. Yeah.
And to another, it's like wow, So, but if you look at the typical rewards in terms of like salary, compared to average, then you get your rewards. Yeah.
Once you qualify.
Yeah.
And is there any like other misconceptions? Like, because I know, because there could be like I know you guys manage risks.
Yeah.
What would be like the difference between like that and an accountant in a sense?
Oh, I see. So let me first begin by saying there's so many professions that use data.
Right.
And that perform mathematic computations on data.
Very
many.
Yeah.
Accountancy, data science,
Yeah.
Analysts, you name it.
Right.
I'm not going to say that I know the deep privy details of each and every profession, but the one you've asked, for instance, accountancy, accountants basically draw up the books of a company. When I say books, I mean if you have a business, they're the ones who will be like, okay, let me help you in showing you these are the assets that you have, these are your liabilities, balance out the books.
Right.
That's, so actuaries don't balance books. That's not what we do.
Right.
So, for instance, if I can just use the example of an insurer's financial statements, the accountant will draw up the financial statements.
Right.
But like one of the biggest balances on an insurer's book is like we call the line like insurance liabilities.
Right.
just a bit of jargon here, but so you'd find typically accountants would go like, especially because I've worked in an audit firm as well. The auditors will come to us as actuaries and say, hey, we need your help in telling us whether this line item, the amount that has been put here, is it reasonable?
Right. Okay.
And then we go and do our independent calculations as well, and then we come and say, hey, this line item. So it's one line item, but the calculations that go behind that number, a lot.
I can imagine.
Yeah, so that's how we can feed in and work with accountants or auditors or, yeah.
And so who do you feel that kind of benefits from your service in general? Like, you know, it could be like the government, or appreciates your service in a sense. Like, could be the government, I don't know, the companies, colleagues, you know.
I think when you say your services, I'm interpreting that as actuaries.
Actuaries, yeah.
Insurers.
Right.
The insurance industry, insurers, reinsurers, brokers. I think because the actuarial profession was kind of born out from this industry. And then now is when we're starting to spread into other industries like banking and non-traditional industries. So they do really see our value compared to other people.
Right.
Although governments as well, especially in in economies that are well developed like here, and they understand the value of actuaries, actuaries also play a part in some governmental decisions. You know, for instance, anything to do with the insurance industry and needs an input of, like, sometimes they can bring actuaries to give input.
Right.
Into what they think about these changes, the regulatory changes, you know. So I also think governments do appreciate us, but I feel like it's only where governments are developed. I mean, and yeah, I wouldn't necessarily say it's the same for all the countries in the world, but I can also say, like, for instance, in Kenya, the government is also starting to understand us more because we're also engaging more. It's a small profession in Kenya compared to here, because it basically started here. But still, because of our involvement with the regulator, telling them, like, that interaction helps the regulator, the government, understand more of, what we do.
What was your kind of defining moment to say, yeah, you know what, this is actually a profession that I love and I'm going to stick to it for however long you're going to stick to it?
No, I think, no, I get what you're asking. I'm thinking because I'm wondering whether there was one.
Yeah, like there was one story that reinforced that, you know, this is what I want to do, this is what I love to do, and this is what I want to keep doing. Was there like one particular story or one event or?
I think, no, to be honest, I can't think of one big event. I think it's just an accumulation of things. For instance, like, Harvard did not work out.
Right.
So let's go into, you know, I went to Strathmore. It's called Strathmore University in Kenya.
Okay.
So let's do that. And then when I get there, meeting people or actuaries coming in to speak to us, and I'm like, that makes sense. Then now going into the industry and actually starting to do the work, and you're like, oh, I actually am enjoying the work. Yeah. So that's why I'm saying it's a collection of
things that happen throughout
At least for now, I can say I still see myself doing it in one way or another. Like now, I'm in a non-traditional path, but I'm still applying actuarial skills to what I'm doing. So yeah, I'm still enjoying it, and let's see.
Yeah, that sounds good. All right, so what we're gonna do, we're gonna go to what we call it, rapid fire. It's not rapid, but you know what I mean? It's just it's either pick a choice or a yes or no. So I'm gonna ask 3 questions, either pick a choice or a yes or no.
Okay.
All right. My first question: does someone's contribution to society, does it impact their worth?
No.
Okay. Okay. For our second question, if you had to pick, which data do you feel is more important when analyzing? The past or the present?
I would say Can I explain why I'm thinking?
You can explain.
I'm thinking because the present is, to me, when you say present, it's one moment in time.
Right.
So if there was going to be, and I'm not predicting anything
of course not.
bad here, but if there was going to be an earthquake now where we are, would I just use that data point to make decisions?
Right.
Not necessarily, because I feel like it's just one data point, but then the past is a collection. You've observed things over a period of time to see whether there are patterns.
Right.
So that's why I'm very tempted to say the past. Okay. But then again, the past could be irrelevant.
Right.
But now you kind of get why I've taken time to think about it. Let me say the past, just because from the past you can be able to observe whether there are trends, patterns, which is better than just observing
what's happening there
single point in time now.
Right.
I would just say that. But it's important to consider both.
But,
yeah.
Okay, so the past,
yeah?
Well, very final question. What gives you the most clarity when making a big decision?
Is this in life or as an actuary?
As an actuary. Okay, so taking time out or constantly going over the data?
No, taking time out.
Okay.
Taking time out. Yeah. There's this meme that I've been seeing going around. I hope I don't estimate it. But it was basically someone saying, when you're doing math and the calculations are all wrong, it flows so well. Okay. Like, you're just doing the wrong thing, but because it's flowing so well, you're like, yeah. So why I'm bringing that up is because the more you're looking into the spreadsheets and the calculations, you need to take a step back.
Okay.
So sometimes for me, if I have, because your mind gets tired, you see the same thing over and over again, you don't even see the mistake glaring at you. So most of the times, especially when I'm looking at a model and a model, like an Excel model or, like calculations for a long time, I would want to like pack it aside and maybe even the next day come and look at it with fresh eyes. So yeah, definitely. Time out.
All right. Yeah, that one, yeah. All right, so for our last kind of questions, so what do you think in your opinion, what do you think your biggest contribution is in terms of helping society?
Yes, as actuaries.
Yeah, as actuaries, yeah.
I think we contribute in a major way to society in the sense of enabling a stable financial ecosystem. And what I mean exactly is like being able to say that I'm part of an industry that is helping people to find their feet, at least where they used to be financially before a major loss happened. So, of course, if you've taken out insurance, but yeah, just being able to say that, because if you lose a loved one and, a father, someone who's, like the main provider of the family, and they took out insurance and then they leave you with this amount. Of course, death, you can't compare life with money, but at least they left you with something that you can still use to build your life or to continue helping you in life, just to be part of an industry which is giving people hope in that way, that despite a heavy loss financially, they're trying to help you get back up again. I think, I'm part of, I feel like, we are contributing to society in a very good way.
Completely. Do you feel that everyone should take out life insurance or well, insurance in general?
I think if you can afford it,
Right. Okay.
I would say it's always good to just, especially like life insurance, for, provider, and if you're the main provider, well, even, I'm not saying that if you're not the main provider, like if a father is the main provider and the mom is not bringing in as much money, but yes, I think it's a good idea to think about.
Right. Okay.
Because this life has a lot of unexpected, like, what I can say, surprises. Yeah.
Okay. And what types of insurance? Are they like life insurance, death insurance?
No. So it's called life insurance.
The whole
like,
thing?
The whole thing, but there are different types. So there's something we call whole life insurance.
Okay.
Which is basically, for instance, if I use you, you decide to go to insurer now and then say, hey, I want to take a whole life insurance, which means I'm going to be paying amounts, either one huge amount now or regular, but typically regularly.
Yeah.
Until you pass away.
Right.
So that's why whole life, like until you pass away, and then that money goes to your beneficiaries.
Okay.
Or but then there are also short term.
Right.
Kind of types of insurance. The other insurance, we still classify them in the life side typically, where there's like almost like savings products. So you find that some people would, if they have kids now who are 5 years old and they're thinking of, I need to pay for their, uni or something. Let me save up, let me pay into this insurance. And then after this number of years, I'm going to take out the money, and then they're going to use that money for their education plans. So yeah, there are different types, but basically that's the idea.
Okay, cool. So for another question, do you see your profession progressing in any different ways? So for example, it could be like more responsibility, more status?
Yeah, I think it is progressing, and it's going to continue progressing, especially when you talk about responsibility. I'm thinking about it in the sense of we're getting involved in more areas compared to in the past. Like now with rapid technology advancements, new risks, like now climate change is a risk.
Oh.
The actuaries were getting involved in climate change as a risk. The actuaries, like for me, I'm in the cyberspace, and maybe a few years back, you wouldn't hear of actuaries in cyber. So because of these evolving risks, we are getting involved more. So in a sense, yes, we are having more responsibility, and of course that means we have to also be very, increase our knowledge base and be nimble in how we do things and adapt our skill set in various industries.
So when you do, for example, like your climate change, as you mentioned, do you then speak to like do you get in contact with like geologists or does it work like that? Or?
Yeah, I'm not going to speak so much about actuaries in climate change because I'm not there, but I would expect that by the time you're estimating the risk coming from climate, you have to talk to different people. The same way an actuary who's in an insurance company would have to talk to people who are in the claims department to understand, so that you can bring all this information together. Yes, you would have to speak to different experts. Even for me, I have to work with cyber security experts to have a better understanding of what it is exactly that we're modeling.
Yeah, that makes sense.
So yes.
Okay, fair enough.
Yes.
And for one of our last questions, do you feel that anything is missing from the profession? Some people say work-life balance, money, status.
No, so in terms of the profession itself, the benefits that it offers, and this is just me, I think it gives you we are ranked as one of the top professions that pays very well, and you still have a good work-life balance. I would look at it from the sense of what's a challenge in the profession, which is kind of what's missing, if I can say it that way. So one of the things is that the demand for actuaries is rapidly increasing and the supply is not growing at the same rate.
Really?
Yeah. So now insurers are having to think, how do we supplement this talent? Like, because we're in dire need of talent and we're not finding the talent.
Okay.
So that's how I can say maybe
and
that's
what about, like, you know, some obviously some people say as well as kind of like mentorship, or, you know, once you become an actuary, is there anyone that like can guide you, or you don't?
Yes. Yes, I'm a mentor myself.
Okay, okay. Oh, cool.
So there are definitely people who can show you the, like for me as well, I got in touch with people who had gone ahead of me just to understand more about what's ahead, what's, you know, what's challenging, what did you come across that you can tell me or advise me to avoid, you know, making the same mistake. So yeah, there is, we have that. It's just right now when I think about the dynamics of the supply being less than the demand, is because right now there are other alternative professions that are almost equally lucrative.
Okay.
For instance, data science, computer science, because people look, if you look at it in terms of the pay, when you're graduating, getting into the industry, they're comparing, you know, and also for those other sectors, they don't have to go through the grueling exams.
Right.
So someone is just like, there's data science here, and I'm going to be paid almost as much as an actuary, if not higher sometimes, depending on what I do, and I don't have to do the exams. Why not go that route? So I think that's why that's one of the factors why the supply of labor is not, you know, as increasing as much as the demand. Yeah.
Okay.
Yeah.
No, it's been absolutely amazing having you on the show, and yeah, I thank you for your time to come, and I hope everyone enjoyed.
Yeah. Thanks.
Thank you.